Oh, we heard that reports where the CBN maintained its MPC committee meeting, maintained rates. So we have our the CEO of Financial Derivatives Company, Mr. Bismarck Rewani, right now to tell us more about these figures, of course, analyze the details and maybe the impact on Nigeria and Nigerians. Thank you very much, Mr. Rewani, for joining us on the News at 10. The central bank has maintained that figure. I saw on your slide where you said CBN holds fire.
Yes.
What does this mean for the country? And did you even expect that this was going to be the decision after that meeting?
Yes. The market was divided. Some felt that it was time to bring down rates by 25 basis points. Many others, the consensus was that hold the fire at this time. And I think they did the right thing. But what you must understand is that in the last 2 years, there have been 10 meetings. 6, they have increased rates. 3, they have actually maintained status quo. And 0 time, they've reduced it. So this has been the step, that what has happened. Cumulatively, interest rates have increased by 8.75%, and inflation has come down gradually at this time. So basically, a very conservative approach. And what we say, now we have 12 wise men. There used to be 11 members, now there are 12. And 12 wise men have made their decision. And what it's all about inflation. What the central bank governor and the chairman of the committee said was that the inflationary trends did not give them enough comfort to know that there's enough, that we have enough buffers to withstand shocks. Basically, we have a world of uncertainty out there and a world of vulnerabilities in here. So the safe thing to do, the cautious thing to do is to maintain your fire, hold your fire, and instead of going precipitously to reduce rates and then change all of a sudden. Because the things outside our control are more than things within our control. And if you look at the inflation numbers, this is the headline inflation, going all the way down from 24.23 to 22.22. But that's year-on-year inflation. When you look at food inflation increased to 21.97. Core inflation, which shows whether inflation is structural or transient, also increased. So in this kind of situation, you have to know this, right? First, the third consecutive decline since June, but first increase in 5 months. That is food inflation. And of course, this reverses trend, which is very important. It tells you structural rigidities are stoking inflation. So if you look at it clearly, you will find that, just a minute, you will find clearly that what are the things, inflation is still a Hydra-headed beast. 1, the exchange rate has gained 6.6% in 2 months. Today trading at 15.28. As a matter of fact, the parallel market, the Naira is stronger in the parallel market than at the official market. That's the first time it has happened in about 12 years. Logistics costs are down. That is PMS price in the last month has come down by 4.4% to 865 Naira per liter. And supply chain disruption, flooding in Mokwa, and also money supply growth. But this is not, we are not yet Uhuru yet. So we have to think about it, and it's best to wait.
But let's take a look at the GDP figures. It was released yesterday evening.
Yes.
It showed a higher figure. But you would want to ask, why did the MPC still retain or keep that rate unchanged?
Very interesting that you say this, because firstly, the social media went on overdrive and misquoted me and saying that I said the economy was limping, while in fact it was limping. So I need to use this opportunity to correct that. Limping is when you grow slowly into recovery. Limping means when you have a leap from, and that is not far from it. Nigeria's GDP rebase is about approximately $250 billion. Nigeria is still the 4th largest economy in Africa, behind South Africa, Egypt, and Algeria. In the world, it's number 40. The goal before was for Nigeria to be within the top 20 countries in the world. We are now number 40. The income per head in Nigeria is $1,000 compared to South Africa, where it's $5,000. Our share of global GDP is 0.23%, and our share of global population is 2.9%. And this is, the economic growth shows an upward trend, but we still have work to do. And let me make it clear. The goal, as pointed out by the president, is that we should be at $1 trillion by 2030. Today, we are growing at 3.1%. For us to go from $250 billion to $1 trillion, we need to grow at 15%. That's not going to happen quickly, except certain things change. So, and that is why we say again, limping out is different from leaping up, right?
And talking about growth, I mean,
Yes.
if you take a look at the local currency, the Naira, it has grown in a few months. If you check the record, anyone would want to ask, is this even sustainable?
Okay, currencies don't grow. Currencies appreciate or depreciate.
Appreciates it.
Okay, so basically, the Naira has gained 8% year to date, but it's gaining against a weaker dollar. If you look at the dollar has lost 10%, so effectively, right, you have to run faster in order to stand still. When you look at it against the pound, it has lost 1%, right? It's now 2,100 Naira to a pound, but the pound is now trading at about 1.34 to the dollar. Against the euro, it has lost 4%. So, yes, it's good, but it could be better. But we're not worrying ourselves. But what is important is if the price of oil drops below $65 a barrel, then this currency appreciation could be threatened. I think it's very important to know that. Now, against other countries, if you look at other countries, right, the yellow line here is Ghana, and Ghana is having the next meeting. They had an emergency meeting 2 days ago, and they're having a meeting on Wednesday. And they are 28%. Nigeria is at 27.5%. Ghana is likely to bring it down to about 24%. The other countries, Kenya is at 9.75% per annum, and South Africa is at 7.25% per annum. So Nigeria is playing very safe. They don't want to do things, and then the markets begin to say, okay, these guys are flip-flopping. So what we've earned is a reputation of being cautious, being stable, and being consistent, and not going with the flow. I think that is what the MPC is trying to maintain. Price stability is a core mandate. But if you go on to the next slide.
Talking about
now,
inflation.
When you look at inflation, let us see how it affects you. Food basket. And we're looking at the price of these things last year compared to the price of it this year. Last year, in July, a bag of rice was 84,000 Naira. It's now 87,000 Naira. So it's up by 3.57%. But don't forget, it had gone down. The price of rice had gone down sometime in the last few months, but it started going back up. Look at wheat flour. It was 59,500 by this time last year. Even though the exchange rate has appreciated, it's selling at 65,000, it's up 10%. Chicken was 4,500 per kilogram. Drumsticks is now up by 22% at 5,500. Eggs are up from 5,200 to 5,500, up 5.7%. Pepper is up 50% from 60,000 to 90,000. And the tomatoes, the big culprit there, is up by 83%. The only thing that came down is Gari, which has come down. It was 46,000 last year, and it's now down to 33,000. But then let's look at the non-food basket. That's where it gets very interesting. The non-food basket, there were 4 items went up and 1 declined. Road transport from Lagos to Benin was 25,000 Naira one way last year. It's now 28,250, in spite of the fact that the price of petrol has come down. Petrol was 770 Naira per litre at this time last year, a year ago. It's now 865, even though it had gone much. Lagos to Abuja round trip was 152,000 Naira by air. Last year, in July, it's now 200,000, up 31%. Lonart syrup, which is medicine, is up by 21%. Lonart syrup was 3,800 a bottle at this time last year, and now 4,600. The only thing that came down, cooking gas. Cooking gas was 15,060 last year. It is now 11,875. So that's good. Okay. But you have to have the food to cook. Right now you have the gas, but there's hardly any food to cook in it. Now, what we want to avoid is happy statistics and unhappy people. How are we going to do that? You can grow as much as you want. You can do all it must. Economics is about the welfare of the people. The people must feel it, must be happy about it. If not, you will have happy statistics and happy people. Now, how are we going to do this? Inclusive growth, make sure we distribute properly, make sure that the benefits of this get down to an area and create jobs. So, and that reduction in poverty levels and create jobs. Now, finally, what to expect by Independence Day. Independence Day is October 1, end of the next quarter. There's going to be one meeting, MPC meeting, in September, just before then. What we think will happen is that some things will change. Food prices will come down because of the harvest. Transport fares, in spite of the fact that petrol price has come down, transporters will try to bilk the people up. House rents will go up, electricity bills, because you're either in band A or band B and all of that. For corporates, utilities will stay where they are. Diesel price will go increase. Borrowing costs will come down because interest rates should have come down. And spare parts and raw materials will be there. For the elites, airline tickets are coming down because even MPC is saying they're going to do London for 1 million naira. International school fees will come down because the exchange rate is appreciating. And luxury goods will stay flat. So in the end, the outlook, oil prices will trade between 65 and 70 as geopolitical tensions ease. Oil production will maintain an upward trend to 1.5 million barrels, which is good for the Naira and good for the economy. The Naira remains stable, trading at about 1,500. That's good for everybody. The parallel market and the official market, the central bank, headline inflation will fall to 22%, and stock market will rally, and MPC may raise rates. So we look forward
to that day. Thank you very much, Mr. Bismarck Rewani, CEO of Financial Derivatives Company. Thank you for your time on the news at 10.